Hello, I'm Tylah Tully and today I'm joined by Airtasker CEO Tim Fung. Tim, you've just released your latest quarterly. Can you run us through some of the highlights?
It was a great quarter. We ended the full year of FY25 with positive free cash flow of over $1 million. But more importantly, we saw our marketplaces revenue growth up 29%. That included like our Australian business starting to re-accelerate again, as well as our UK business growing over 100% year on year, and our US business growing over 750% year on year.
So what were the biggest drivers of this rise in revenue?
Our Australian business, we've been really focusing on building out brand salience and increasing awareness of the product in Australia. We've still got a long way to go. We've got two great media partners, oMedia and ARN, in Australia that have been helping us to grow our brand awareness. So we've seen brand awareness improve, and that's re-accelerating our Australian business. On top of that, we've done some great media deals in both the UK and the US. And so in the UK, our business is starting to become quite a significant contributor to the overall group. We hit a GMV ARR, annualized run rate, of over $21 million in our UK business, and having that growing at 100% and being a meaningful contributor to the group was certainly a contributor. And then the US, a smaller market, we've now hit over $7 million in annualized run rate in the US, but that's growing at sort of 750%. So even though a smaller contributor, very, very fast growth. When you combine those things together, you end up with something that is cash flow positive, which is awesome, and also starting to show really strong underlying growth.
And can you explain a bit further the investments you made in new marketplaces?
So in our UK marketplace, we have a great partnership with Channel 4 Ventures. So Channel 4 is a very, very large TV network, and we've been investing alongside them into building our brand presence in the market. At the same time, we're also launching into new cities. So continuing to build our marketplace on the ground in London, but also launching new cities, Birmingham and Manchester. And we've seen some really exciting results where we're able to predictably grow the market from, nothing's there, nobody's heard of Airtasker, to a bustling community in a pretty quick and predictable way. So really exciting to be able to do that. And that's a very repeatable and scalable model.
So what can we expect from Airtasker in the coming months?
We're going to continue to invest into our core platform and our brand in the Australian market. We have a long way to go in this Australian market, and we're seeing that growth come back and re-accelerate. Not just re-accelerating in absolute terms, but also in relative terms. We're actually growing the percentage year-on-year growth rate. So we think that's in a really, really solid position, and that's very, very much cash generative. Awesome. Then we're taking that cash and we're turbocharging that alongside our media partners in the UK and the US, and we'll continue to do that. So I would say that we're going to be doing more of the same, and that is a good thing because as we scale the business, that's really going to deliver results.
Yeah, it definitely sounds like a busy year ahead. Tim, thanks for joining us today.
Thanks so much for having me.
For more ASX news and analysis, subscribe below.